highlight for today is going to be a short one, but something I said that resonated with a couple people that chatted back to me, and it was the visualizing what the chart might look like. So if you're bearish and short, bullish and long, you have to say, first of all, if you're let's say you want to get long and the market is strong and it pulls back, right? And this is an area that you want to maybe fight for a location to get long, open up a long position. You should always be visualizing what is the chart going to look like if you're right. That's this dotted dashed line here. What would it look like if it's choppy? What would it look like if you're wrong? So if you're getting long in this area, you're expecting it to look like this. Now, it could go sideways and look like that. It could go sideways and look like that. It could just run right through you. But if you visualize this stuff, it'll help you manage your risk, and it'll help you keep you less surprised as to what's happening, because one of these 3 or 4 outcomes are going to happen. You're going to get long, it's going to go right against you. You're going to get long, it's going to go right your way. You're going to get long, it's going to go a little your way and then sideways. You're going to get long, it's going to go a little against you and then sideways, right? And those are pretty much the outcomes. So you have to visualize this and have a plan. If any one of these things happen, number one, you expected it because you visualized it. And visualization is really important in sports. They talk about it all the time. But it's also important in anything. What's it going to look like as you're building the deck? What do you want it to look like if you're a carpenter? What's it supposed to look like? I think artists do a lot of that. But visualization is, what should the chart look like if you're right, if you're wrong? So you're not so surprised. And it'll really help you read a chart when you're visualizing what it looked like. Like after today, Powell came in, they rallied it, they broke it through where he came in. They held the 69 halves like we talked about. They rallied back through the highs. They came back to like 74, and then they re-rallied, and now they're settling right in there. That's a simplistic run through of what the market did without going back, right? You kind of remember the pattern, the rotation. But look at this chop here. What we just said is that this rally, take a look at this rally. This pullback came too deep against this rally. From this circle to this circle is the move. The retracement came too deep. And so we said we're going to get some sideways action. It's hard to go straight back up when it came down too far. And now what is it doing? It's breaking out of this consolidation box. You visualize the market leaking lower. And so you're not surprised when it does and what a breakout looks like on a chart. Start visualizing what the chart is going to look like, because it's easy to see it, what it looks like. Fifth grader could tell you what it looks like. But a fifth grader can't visualize what it's supposed to look like. If you're right, if you're wrong, or if you're early, or if you're late, or any of that stuff. Good luck. Stay safe.